Hello everyone, it's Petko Alexandrov from Trading Academy, and today I will talk about the most volatile currency pairs. Now, the most volatile currency pairs are not the most popular forex pairs, okay? Euro dollar, pound dollar, dollar yen. These are the currency pairs that are most traded, most popular, but exactly that makes them less volatile, and I will explain you why. So let's start first from what are the forex currency pairs and what is the volatility. So if you are a beginner, probably you know already that there are different markets like the forex market, cryptocurrency market, stock market. There are futures, bonds. It's a lot of things to trade, okay? The most popular is the forex market with one of the biggest volumes daily, over $5 trillion. Now, euro dollar definitely is the most traded currency pair, okay? It represents the economies of Europe and the States. It's a lot of transactions. A lot of European companies are working in the States, a lot of US companies working in Europe. They exchange, they send profits, they convert their income into the national currencies, and it's a lot of trading volume for the euro dollar. But exactly because many people are buying and selling it, like 20% of the forex market goes to euro dollar, that makes it not that volatile. Let me put that simply. Imagine you are on the vegetable markets. A lot of people selling potatoes, cucumbers, mushrooms, apples, but there are just a few out there that are selling pineapple, for example, okay? So they can actually increase and decrease the price because it's a few of them. The others that are selling the most common fruits and vegetables, they go to average price and they cannot fluctuate a lot with the price. Same thing on the market. When a lot of people are trading the euro dollar, a lot of transactions, a lot of euro exchange for dollars and vice versa, then the price fluctuates less. And that is the volatility. The more the price fluctuates up and down, the more volatile is the asset. And these are usually exotic currency pairs, or these are the commodity currency pairs. And before I tell you which are the most volatile currency pairs, I would like to explain what is the currency pair for the beginner traders. So if we have euro dollar, let's say here is the euro and here is the dollar. If euro dollar rises, it means euro rises, okay? This is very important to note before you start any trading. If euro dollar falls, then what that means? The dollar is stronger. However, if euro right over here is not moving, not strong, not weak, neutral, okay? It depends what happens with the dollar. If the dollar is weak at that moment, euro dollar will go up. If the dollar is strong at that moment, then euro dollar will go down. So it's about the two of them, which one is stronger than the other one at the current moment, and that's what drives the price up and down. And here are some of the most volatile currency pairs. The first two are quite interesting. This is the American dollar versus the South Korean won, and the second one is the American dollar versus the Brazilian real. So these two are quite popular among the aggressive investors, I can say, and traders, because the huge volatility in these currency pairs usually makes easier profits, but at the same time it could bring you easier losses. So be careful trading these not popular, I can say, but most volatile currency pairs. The second most volatile forex pairs are the Aussie yen and the New Zealand yen, because these are economies highly connected to their exports And for example, Aussie yen, Aussie stands for Australian dollar. So Aussie yen means Australian dollar versus the Japanese yen. And the yen is considered to be one of the at least volatile currency pairs, which means that it doesn't move that much. Actually, the investors consider the Japanese yen as a safe haven currency, which means that when there is some uncertainty on the market, they put a lot of their investments into Japanese yen as a stable currency, so they are not risking with a lot of fluctuations. Okay, at the same time, Aussie or the Australian dollar depends a lot on the export that Australia does. So when the price of the exported goods changes, that easily makes the Aussie yen a very volatile currency pair. Same thing with the New Zealand, which is known as Kiwi. So when you say Kiwi to yen, means that is the New Zealand dollar versus the Japanese yen. And actually it's known to be Kiwi not because of the fruit, but because they have a bird called kiwi, and it's kind of national mark for New Zealand. Okay, so when the prices of dairy goods or eggs or meat, wood, they export a lot of these products. When the prices change, this makes the New Zealand dollar very volatile, and especially against the yen, which is a stable currency. So when the New Zealand dollar or the Aussie move up and down and yen is stable, that makes the two currency pairs, the Aussie yen and the New Zealand yen or the Kiwi yen, very volatile. The next most volatile currency pairs are the Euro pound and the CAD yen. So Euro pound used to be not that volatile, but since the vote of Brexit in 2016, and it actually happened now in 2021, what happened is UK is separately from the Europe, right? Then the Euro pound started to move a lot and became one of the most volatile currency pair. However, with some brokers you can find it as euro pound, with some you can find it as pound euro, but it's the same thing. Alright, so the whole Brexit thing made euro pound one of the volatile currency pairs that I really like to trade. The next one, CAD yen, which means Canadian dollar versus the Japanese yen. Now, as you probably know, Canada exports a lot of oil. This makes the CAD as a currency closely related to the price of oil. And because Japan imports a lot of oil from Canada, they obviously need to buy more Canadian dollars with their yens, and that makes the CAD yen a very volatile currency pair, related of course to the price of the oil. So when there are some fluctuations with the oil, the CAD yen moves as well very nicely, and we can easily trade it because we usually know what is going on with the oil from the economic news. We know when are the OPEC meetings where there are important speeches, and it's a little bit easier to trade the CAD, which is related to the price of oil, compared to the export of dairy products from New Zealand, for example, right? The next most volatile forex pair is the pound Aussie. So as we said, Aussie or the Australian dollar is very related to the exports that Australia does. However, before the US-China trade war, Australia had a very strong partner in the face of China. But after the trade war, that changed, and the value of exported goods from Australia fell, which made the pound Aussie a very fluctual currency pair as well. Dollar ZAR, or this is the American dollar versus the South African rand, a very volatile currency pair which had a fantastic uptrend for a long time, and it was super easy to trade, and a lot of the investors did a lot of profits from trading the dollar ZAR. Now, why this currency pair is so volatile? The South Africa export mainly is with gold, and as you know, the gold is the backup for all currency pairs, and especially for the American dollar. That's why the price of gold is usually related with the American dollar. So when the price of gold rises, more rands are needed to purchase American dollars. Number 9, American dollar versus the Turkish lira. The Turkish lira has lost a lot of its value in the last decade because of political events, elections, trade war with the United States, and the lira was one of the best profits I could have ever taken, and together with the Russian ruble, actually, when these two collapsed, it was super easy to take some quick profits, okay? But that's not a long-term trading. I'm talking about when something happens on the market, we want to take advantage of it, and we do it. Basically, this is how I use personally the most volatile forex pairs. And number 10 for the most volatile forex pairs goes to American dollar versus the Mexican peso. As you know, since Trump became a president, there was kind of rocky relationship between the States and Mexico, which made dollar Mexican peso to be a very volatile currency pair. So these are the 10 very volatile currency pairs. But one more time, this doesn't mean that these are the very popular currency pairs we trade. As I said, personally, I trade the most Euro Pound, and with all the rest, I just take advantage when there is something extraordinary on the market, when any of them collapse, crashes, something extreme happens and it moves like 1,000 pips, then I would be happy to be participating and to take some quick profits, but that happens honestly rarely. Alright guys, thanks for watching this video. This was about the most volatile forex pairs. If you have any questions, drop them in the comments below. Of course, probably by the time you're watching that video, some others could be more volatile because it depends a lot on what's going on in the market, the exports, prices, and it's all about if you want to be more risky trader or you'd prefer to trade the most popular currency pairs like euro dollar, pound dollar, dollar yen, and stay away from the volatile currency pairs. Thanks for watching. If you have enjoyed the video, give it a like, and if you have any questions, let me know. I will see you in another video. Cheers!